All right, good afternoon, folks. This is your free video from seasonalswingtrader.com. Today is Thursday, October 19th, 2017. Today's focus is on December cocoa. And what we're looking at here is you can see that from all the way back to March, we've been in a narrow sideways channel, or the NSC pattern. It's one of my favorite patterns because these type of patterns typically lead to explosive breakout and long-term trending markets. So right now, today, this is an end-of-day chart that we're looking at. You can see we closed at 2067 yesterday. We're currently trading with less than an hour to go in the trading session, currently trading at 2146. So the top of this channel is at 2130, but when this chart updates tomorrow, or the price bar will be right around here, so you can see we'll have nudged out of this channel. What we like to look for on these breakouts is a breakout here above the channel, pull back down and retest the top of this channel, hold, and then a march to the upside. So right here we're looking at a breakout around the 2130 level. First targets are going to be here at the 382. We can expect to see some resistance at the 2260 level, and then ultimately our next target will be here at the 2400 level, which is the 50% retracement level. If we go over to a weekly chart here, you can see the 24 level is going to be right here at this past resistance. Again, we probably will see some resistance here at the 22 half level. And notice after a fundamental beat down here all the way up from the 3000 level all the way down to 1760, we've kind of made a rounded bottom or triple bottom here. Bottom here, bottom here, bottom here. Looks like we are ready to potentially move higher. Seasonally, we're not all that bullish. Notice that we experienced some seasonal weakness. These are the 3 and 5 year price averages down here to mid-October. Then we get a small bump going in towards the end of the month, falling back down in November before baselining out into December. So what we're doing here is we're looking at taking some low-risk call spreads, and we'll bring over an option chain on the March cocoa. We're looking at the March 2018 cocoa with a December 1 expiration. Looking at buying the 21 halves here, the 21 half calls for around 70 ticks. That's $700 per contract. And then what we'll do is we'll spread it out with our next legs by selling our target area. So we'll sell the 2400 strike. So we're buying here. At the money's 21 halves, selling our target strike to 2400. So we're buying the 21 half calls, selling the 2400s. If you look at the chain here, we're going to pay 70 ticks. We're paying 70 ticks for the 21 halves. We'll sell the 2400s here. You can see they are going for, they're 12 by 16, so we'll say 13 ticks. So that's 70 minus 13. That's a total of 57 ticks, or $570 per contract, per spread. So we're paying $570 per spread. That's our max risk on the trade. We are looking for a absolute profit potential of, we take the short strike minus the strike we purchased. That's 250 points, less what we paid for the spread of 57. That gives us a profit potential, max profit potential above 2400 at expiration of 193 ticks, or 1930 a contract. Each tick is 10 ticks, so that's paying $570 to potentially make $1,930. Now, if we are wrong, let's say we get a false breakout here, we break out, we get long the spread for 57 ticks, we come back into the channel and may even go weaker, we simply risk half of the premium paid for the spread. So we're risking about 25 ticks or $250. So we're risking $250 to potentially make $1,900 on the trade. That's a risk reward we like to take. We'll see you on the next update. Feel free to follow us on Twitter, YouTube, Instagram, and Facebook, and we'll see you on the inside. Traders, like what you see, want more trade ideas each week? Take a $7 30-day complete member access trial by clicking the link below. You'll have immediate access to analysis and seasonal trade ideas on over 35 commodity and currency futures markets, as well as coverage on all of the major stocks, exchanges, and ETFs in the U.S. marketplace. If you like us, follow us on Twitter and Facebook, like us on YouTube, and we hope to see you on the inside.